Hello and welcome to Stockwatch, your weekly news channel brought to you by Bitesize Investments. As we look back upon this week, these are the main headlines for the Magnificent Seven. Microsoft disappointed investors this week with its financial report. While revenues were stronger than expected, the software giant's forecast for the current quarter fell short of Wall Street expectations. Does this represent a buying opportunity for those investors who have the patience to wait until Microsoft monetizes its investments in generative AI? Top analysts do see considerable upside for the company's stock. Microsoft's guidance for the current quarter fell short, even though the company beat earnings expectations due to rapid growth in its Azure unit. Results were also helped by Microsoft's acquisition of the video game publisher Activision Blizzard. Apple released its first mixed reality headset, the Vision Pro, with 600 new apps and games. The question is, can they take advantage of their interactive e-commerce products? The Vision Pro app presents headset users with a 3D shopping experience, enabling them to pursue products and assemble outfits. Additionally, the integration of the SharePlay feature for FaceTime video calls enables the retailers to provide real-time advice from stylists in a lifelike environment. So watch this space for Meta and Apple go head-to-head in the VR headset war. Google this week reported a $1.2 billion charge in the fourth quarter as they exit office space, a notable cost that largely flew under the radar in a hectic week. The search engine giant dropped 7% on Tuesday and said the new charge stems from an effort to optimize its office space globally, which in 2023 resulted in costs totaling $1.8 billion as the company worked through announced staff cuts. While many corporations have been downsizing their office footprints in the wake of the pandemic, big reductions in space from major technology companies will have a massive impact in the future. Jeff Bezos plans to sell a large amount of Amazon shares in the next year, as indicated by the Securities and Exchange Commission. Bezos said in the Friday filing that he had a trading plan for selling a maximum of 50 million shares under a pre-arranged plan that he adopted in November. The sales have occurred over a period ending in January. Amazon's stock price has risen nearly 8% from the start of the week. With its latest jump tied to the news, it's generated $170 billion in revenue and $10.6 billion in net income in the fourth quarter. Its market cap was worth $1.78 trillion as of Friday afternoon. Meta saw their shares spike by 20% on Friday, following their fourth quarter earning reports. While revenue topped estimates, the main story for investors is that they're showing an ability to do more with less. There's also a recognition that investors value cash in many cases above all else. The tech industry has long preferred to reinvest excess cash back into growth, ramping up hiring and research and development. But following a year of hefty layoffs and capital preservation, Meta on Thursday announced for the first time it will pay a quarterly dividend of 50 cents per share, while also authorizing an additional $50 billion stock repurchase plan. Tesla's board has its work cut out following a judge's surprise ruling against Elon Musk's massive payday. The ruling found that Musk's £55 billion compensation package was beyond the bounds of reasonable judgment. The court ruled in favour of the plaintiff, a Tesla shareholder who argued that Musk had unduly influenced the pay plan through the close personal relationship with the board members. Judge Kathleen McCormick of the Delaware Court in Chancery wrote, "Neither the Compensation Committee nor the board acted in the best interests of the company when negotiating Musk's compensation plan. In fact, there is barely any evidence of negotiations at all." In response, Musk said he'll push to transfer the incorporation of Tesla from Delaware, where the court ruling occurred, to Texas. Nvidia Corp is a clear beneficiary of Meta Platforms' rampant spending on artificial intelligence, according to an analyst. The Facebook parent company now expects to spend up to $37 billion on capital expenditures this year. Meta's talk of spending plans for the year has a Wells Fargo analyst feeling increasingly confident that Nvidia will be able to deliver an upside to its quarterly results. The biggest stock market movers this week are Meta with a 20.76% increase. Nvidia has increased by 8.05%, Amazon by 7.83%, Microsoft with 1.27% and Tesla with 1.23%. However, the biggest losers this week are Google with a loss of 6.37%. and Apple with a loss of 3.21%. Now we come to the next segment of our Magnificent 7 weekly news update and dive into our stock focus of the week, which is Amazon. Let me know in the comments section which stocks you would like reported on during our stock watch. This is brought to you by Bitesize Investments. During this next section, we are going to examine the key metrics of the company by comparing them against businesses that operate within the same industry, as well as reviewing the bear and bull cases. In addition, we will look back at the historical share prices and find out what the target price of the company currently is. And lastly, we will then find out what the analysts' consensus is and what their forecasts are. Now we're going to jump into the 5 key pillars for Amazon, where we look at the earnings per share, which is currently 612%. We look at the free cash flow, which is 79%. Revenue per share is 4%. Book value per share is 21%. And return on invested capital is 6%. All these metrics look really fantastic, especially the earnings per share, which has grown 612%. Let's see what it does when it's compared against some other companies in the same industry. We can see that Alibaba has an earnings per share of 88%, a free cash flow of 11%, a revenue increase of 8%, and a book value per share of 7%, and the return on invested capital is also a really good 10%. PDD Holdings has an earnings per share of 44%, a free cash flow of 71%, revenue per share of 49%, book value per share of 35%, and return on invested capital of 25%. The key pillar that really stands out for Amazon is that earnings per share, and we would want to see the return on invested capital become greater as well, as it's currently 6%, and we'd really want to see that over 10%. Okay, let's now look at the bull and bear cases. First of all, the bull news, which is the stock price increased about 8% based on their quarterly earnings report. The potential of the generative AI that has potential to make tens of billions of dollars. And the news that the music and video streaming services are up 14%. Amazon predict that the climate change disruption is going to lead to increased operating costs due to more frequent extreme weather events. And lastly, should investors be worried that Jeff Bezos is selling some of his shares? Now let's look at the historical share price of Amazon and see how it compares to today's price. If we go back to 2013, we can see that Amazon's stock price was trading at an average of $14.87 and how it has significantly progressed year on year to a very positive share price of $171.81. Now let's jump into the analyst price target. Analysts believe that Amazon's price target should be $182.29. What do you think it should be? Do you think this is a fair price target, or do you think it should be higher or lower? The overall analyst consensus for Amazon is that it is a strong buy. Lastly, let's look at the analyst forecast for Amazon, and here we can see that they predict in 2024 they will have a growth of 34.8%. In 2025, they believe that we'll have a 33.79% increase, and in 2026 a 24.42% increase, and in 2027 a 23.37% increase, and in 2028 a 22.14% increase. Do you agree with the analysts' forecasts for Amazon? Do you think they're overinflated, or do you think they will go even higher? Please consider liking and subscribing to help the channel grow.